You all know who the Winklevosses are. They're jocks from Harvard who sued Mark Zuckerberg for millions of dollars years ago. Today we will explore what happened to the Winklevoss twins after we last saw them in the Facebook movie. When we last saw them, they accused the founder of Facebook, Mark Zuckerberg, of stealing their idea to make Facebook. While this was somewhat true, ideas are cheap. It's the execution that matters. However, there was a chance that the courts wouldn't care that there were websites like MySpace which had existed before Facebook. So the idea didn't belong to the Winklevoss twins. Before things could get hairy for the Winklevosses or Facebook, both parties chose to settle out of court. The twins received $65 million worth of both stock and cash from their settlement with Facebook. After getting Zuckerberg's money for themselves, the Winklevosses decided they wanted to make more money. The way they went about it was the same as all the other investors in Silicon Valley. The winklevii became investors in startups, or at least they tried to be. The twins approached dozens of startups, but none of the founders wanted to sell their company to the twins. Apparently, the Winklevoss twins had been blacklisted by every startup in the valley. Using a lawsuit to gain money they didn't earn themselves made the twins look like pariahs. Worse still, none of the startups wanted to become enemies with Mark Zuckerberg, the founder of one of the most successful startups in Silicon Valley. Startup founders were scared of accepting funding from the Winklevosses because if they were associated with the winklevii, there was a chance their startup wouldn't be bought by Facebook, which had a ton of money to burn after their IPO. The Winklevoss twins would never have access to Silicon Valley startups, or so they thought. During a trip to Ibiza, their lives would change forever. There they met a man who not only wanted them to invest in his startup, but also convinced the twins to do something that would change their lives forever. The man's name was Charlie Shrem. He wanted the twins to invest in his crypto company, BitInstant. To convince the twins, he had to explain what Bitcoin was to them. Whatever Charlie said made the winklevii buy lots of Bitcoin, hundreds of thousands of dollars worth at a time when Bitcoin was only $8 a piece. It had only been 3 years since Bitcoin had entered circulation after all. According to John Tolt from Margin Call, there are 3 ways to make a living in the business: be first, be smarter, or cheat.
There are 3 ways to make a living in this business: be first, be smarter, or cheat.
The Winklevoss twins were among the first adopters and investors of Bitcoin. In its early years, they managed to get their hands on 1% of all Bitcoin at a steep discount. The Winklevosses' investment in BitInstant would fail, so not all things went perfectly. Charlie Shrem was arrested for allowing criminals to buy Bitcoin from his crypto exchange, BitInstant. The criminals would use the Bitcoin they obtained from Charlie Shrem to buy services from an online black market called the Silk Road. BitInstant lost its license to operate because of this scandal, but not all was lost. The winklevii still had their Bitcoin, and they made billions of dollars as the price of Bitcoin went up through the years. The Winklevoss twins created a crypto exchange so customers could have a place to buy and sell Bitcoin and all the other cryptocurrencies which had popped up after Bitcoin gained notoriety. The winklevii created the Gemini exchange. This crypto exchange would become popular among crypto enthusiasts. While it wasn't the largest exchange in the world, it was still big enough to be worth $7 billion back in 2021. The twins invested in more crypto-related companies like BlockFi, one of the first crypto lenders in the US. They funded the Nifty Gateway, a platform for NFTs which sold digital collectibles running on blockchain. The twins went crazy, buying up even more Bitcoin and other crypto just in case crypto prices rose further, which was the general consensus at the time. The twins had done it. They had amassed a fortune for themselves. Some of the stigma associated with suing Facebook for money that they still clearly didn't deserve melted away. Then the collapse occurred, dragging the Winklevosses down with it. Crypto prices plummeted as a string of large crypto companies bit the dust. BlockFi went bankrupt. NFTs lost their popularity as customers were exiting the crypto market in droves. And worst of all, FTX had collapsed. The Winklevoss twins were offering an earn product on their Gemini exchange called Gemini Earn. The Winklevosses promised crypto customers that if they put crypto crypto in their Gemini account, the exchange would guarantee high interest rates for them. These rates were as high as 7% in annual returns. You'd need to put your money in a dividend aristocrat or a dividend king like AT&T stock to get those kinds of crazy returns. The issue here is Gemini Earn was unsustainable, but from the outside, it seemed that the Gemini exchange were keeping their promises to keep giving those sweet 7% interest rates to customers. Many crypto exchanges offered it. Unfortunately, those sky-high interest rates were only possible when crypto prices continued to rise. When FTX collapsed, Gemini was in trouble as crypto prices fell. The twins had parked Gemini's crypto in a company called Genesis. Genesis promised to make enough money so Gemini could continue giving those 7% interest payments to their customers. Genesis took the crypto and gave it to Three Arrows Capital so they could make the money for Genesis. It was a game of pass the buck. Three Arrows Capital collapsed because of FTX's failures, so Genesis lost a lot of money. Instead of finding more money to plug the hole, the parent company of Genesis, DCG, just gave it a promissory note of $1 billion, which didn't mean much. Genesis had lost Gemini's money, so now the twins were on the hook for $900 million of customer money. They forcibly halted withdrawals from the Gemini Earn program, causing massive panic. The Winklevoss twins had a public fight with the owner of Genesis, Stilbert, on Twitter. Stilbert was the one at fault here. Regardless, the man still didn't want to give the twins their customer money back. It was only after the Winklevosses terminated their Gemini Earn agreement with Genesis that Stilbert was finally forced to agree to a deal so Gemini Earn users could recover their assets. In addition, Gemini would give Genesis $100 million so Gemini Earn customers could take more of their money out. DCG, Stilbert's company, will exchange its existing $1.1 billion note due in 2032 for convertible preferable stock issued as part of Genesis's bankruptcy plan. DCG also agreed to sell assets in his Grayscale Bitcoin Trust to raise money for Gemini customers. The 340,000 users of Gemini Earn will get some of their money back. For the Winklevosses, it's still not a happy ending. They were sued by the SEC for selling unregistered securities to retail investors. Honestly, it's not looking good for the winklevii. Perhaps going into Bitcoin wasn't the best idea they had. Thank you for watching. If you enjoyed the video, subscribe for more videos like this one. It would really help the channel out.